Hi, Happy New Year, everybody. Today is Tuesday, January 1st, 2019, taking a look at NVDA. I thought this one deserved a little video because it's had such a tremendous leg down and could have such a tremendous way back, but it's good to talk about the possibility of just a little bit more downside before it possibly bounces back. And of course, if the overall market does roll over one more time as we get into 2019, which we have to face it, there's a very more than 50% chance, I would say, that that's going to happen, that we have not really seen the lows yet with 2346 on the S&P 500. And Nvidia is gonna take another leg down if the market turns as well. So let's take a look at some possibilities here. This is a backed out about chart about 3 years view. This is the daily chart, and you can see that the low, the 3 year low, at least on this chart anyways, is about $24. And the high is all the way up at 292 that was set this year. And you can see this tremendous leg down that it has taken this year. But it left open this pretty big gap here that is still sitting there from 2017. And when we look in a little closer, you can see that the stock was basically range bound and very flat, waiting on an earnings report because it had made such a huge run up to begin with from this $24 level to this sort of topping out point at $100 up from there at 124. And then it kind of sat sideways, and then it got an earnings report in May of 2017 that made the stock gap up open from 102, the close the night going into earnings, to gapping up open to 114 the next day. And in this low that we came down to in December, shoot, sorry about that. Let me fix my expansion here so we can actually see this. And this low we came down to in December, for some stupid reason, didn't fill this gap in. So that just leaves the door open for some poor souls to get in here and buy this up and maybe take it back to $200, only to get slammed back down $100 again from there. So that would be my one, thing that I would fear of putting money in the stock itself going forward until this situation is resolved. If this gap were to come down and get filled, I would say, buy it both barrels, because this is a darling of the market. If the economy does stay on track, if this trade deal gets resolved at some point in 2019, this stock has a great potential to go all the way back to its all-time high, right up above it right now. So that's the potential for the downside. Me personally, I would be very interested in buying common stock, even if this gap were to fill and it would prove that it can support $100. If it can't support $100, then it's going to fall into the whole 80 handle rule thing, and we'll discuss that some other time, because I'm sure people are looking for a video on this to ask what to do right here in the near future. And I would say that if there's any weakness, if there's any rolling over of the market, this thing's going to go down, and it's going to fill this gap to May 2017. And if that doesn't hold, then you kick in the 80 handle rule and look for 80 to hold, and so on and so forth. But right up above it, what's going on right now in the forefront is that it put in the 2018 low, 124.46. It put in about 3 days of support there, and it's moved up. And on Friday, I keep thinking yesterday was Friday. Yesterday was Monday, but because it was like we're going into a holiday, it always seems like it's a Friday. Anyway, yesterday it did not, close above its 10-day simple moving average. It traded right up to it, but it did not close above it. But if the market follows through on that little buy program that happened at the end of the day yesterday, and we come in strong tomorrow, this will probably trade above the 10-day simple moving average and go after its 20-day. So you just, if you want to play this long with calls or whatever, in my opinion, you ought to wait and make sure that it can hold on to the 10-day simple moving average. If it can't, then it might be a play with puts back down here to 124. But if it can, and it really does look like it would, then go ahead and buy calls and look for a target of the 20-day simple moving average up at 144 to 145. Although this is a falling line, so it might be more like 143, 142, something like that. If it can make it over the 20-day simple moving average, you've got your basic 150 level, and then we get in through some of these other levels. I'm going to correct these before I post the chart along with this video. There's some other stuff in here that's probably better to follow than this. These are still leftover levels from the last time I revised the chart. But ultimately, after the 20-day, you're going to want to go after and look for the 50-day to get fulfilled. You know, get that taken back. And then there is a huge gap, even bigger than this one, an absolutely tremendously large gap that extends from about 175 all the way to just over 200. So that's what you'd be playing with on the upside. And this is where I think like what could happen. It could fill this gap and get right up tucked under here on the halfway back point for the stock from the 2018 low all the way back to that all-time high is 208.61. I can certainly see the stock moving all the way back to here and then rolling over and selling off overall with the market, kind of like in that scenario that I mentioned at the beginning of the video. Okay, so you got to follow your simple moving averages. There's a little gap in here that I will mark more properly with this chart, but obviously you've got to focus on what's going on inside of this whole move that it's made, particularly the halfway point in this whole little section of price here from 175 down to 124. Obviously that's going to be about 150 probably, and that's, you know, right here, right just above the 20-day simple moving average. So you know, if it's got momentum in it, it'll shoot right up through there and it'll go right for this 50-day. If it doesn't have enough momentum, it might get hung up underneath the 20-day for a bit, but use your 10, your 20, your 50-day, the midpoint of this section here to sort of estimate, you know, how far out and how far out of the money you want to go with calls or whatever. And once it gets over the 50-day, it has this gap to contend with. But once it fills this gap, once it gets back to $200, I would be very cautious. I would be very cautious that maybe it can't make a higher high against this bounce here. And that would be a point between, you know, filling this gap, maybe failing the 100-day simple moving average, maybe failing to hold on to the 50% point back to its all-time high, that it could become a tremendous short to come all the way back here and fill this gap. But of course, if the overall market is doing well, NVIDIA is going to do well. If the overall market rolls over, NVIDIA is going to roll over too. Okay, I hope that answered your questions and made sense. Good luck and good trading on NVIDIA.